Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mikkel Larsen, CEO of Climate Impact X, and Virginie Barbot, Head of Southeast Asia and Pacific at Marketplace Technology at Nasdaq, to discuss development and institutionalization of the voluntary carbon market. It is great to have you with us, Mikkel and Ginny. Let's start with you, Mikkel. Before we dig into CIX, can you explain to our viewers about what carbon credits are and what influences their price points?
Sure. It's a great question to start with because there's quite a bit of confusion in that area still. I guess at a technical level, it's carbon credit is an instrument between a buyer, normally a corporate, and a project developer, the seller, where the buyer pay money to the project developer to essentially sequester a ton of carbon, keep carbon out of the air. But more conceptually, you can think of it as a partnership. Corporates, as you probably know, are trying the best they can to decarbonize in the different industries. But reaching that last step of that is still really challenging with the technology and the economics we have in this point in time. And so what they do is they team up with project developers who have the ability to do what the corporates can't always do, and therefore have either a new technology that they want to bring to market, but where they need a bit of an incentive to actually make it viable, or they want to preserve a carbon sink, for example, a forest, and the money that is being paid by the corporate buyer helps them enable that to happen. So in overall, you can think of it as a partnership. The price, therefore, is determined as the price of the project. How expensive is it to do it? But also the quality of that project, something which is quite important. And quality means many, many different things. And it's probably a little bit too much in the first question to go into all the different dimensions. But it has to do with how good is that project at keeping carbon out of the air, and some of the other so-called co-benefits that comes with it, the social impact and the environmental impact.
Ginny, what trends are we seeing as an infrastructure provider?
Well, it's really clear that the market will continue to grow, although it's relatively new. It will continue to grow just because we simply need to have the capacity to both reduce and remove carbon from the atmosphere, as if you want to reach net zero and ramp up our efforts to combat climate change. I believe it's important to note that the specific trajectory of the carbon market landscape can be influenced by various factors, which include political will and societal shifts as well. But overall, the overall trend is towards greater market activity and a more robust global carbon market in the coming years. There is a push for global guidelines, frameworks that will make both buyers and sellers trust the market. There's a need as well to enhance transparency, as Mikkel was mentioning, around transaction prices, types of credits, and criteria around the credits. So it's the usual pillars of a well-functioning markets, which are integrity, transparency, liquidity, technology. And when you have all these, the market can truly grow and scale up. So obviously at Nasdaq, we have a unique perspective in the market because we are a global technology provider to capital markets, but also a majority owner of Pure Earth, which is a crediting platform for engineered carbon removal. And we're truly thrilled to have a strong partnership with CIX as well.
Mikkel, how will CIX now be able to uniquely cater to all major user requirements in the carbon markets ecosystem?
Yeah, that takes us back a little bit to why we got started as a company right here in Singapore. What we wanted to do is we wanted to bring new types of carbon credits to market and help them scale. And we wanted to make sure we breach that trust gap that exists in the market because of some of the things that have happened in the industry in the past. But what we realized is that trust looked different to different types of client segments. And so to cater for that, we have 3 platforms. We have a marketplace which cater for the corporate buyer. And in that platform, what we try to do is we try and go the extra mile to try and make sure we explain to them why they're buying credit at different prices, what good looks like, and what the right claims they can make when they buy these credits. There's quite a bit of hand-holding that is required in the target segment that we try to cater for. Then we have an auctioning platform where we try and bring some of these new types of credits to market and have price discovery. But the truly exciting bit that we're getting to now in the partnership with Nasdaq, which we are launching this week, is really the exchange. And here we're talking about a more sophisticated buyer group where, as with other commodities, and this is a market that is getting commoditized, but it takes time. the trust that they need is they need to make sure that they get a good execution, that they get a good insight, that they get a good price, but also that the product that they get delivered when we're talking about an on-exchange standardized contract is one that they can actually trade, that they recognize, so that because carbon credit has so many varieties, what they get is the right type of things that they can onsell to their clients.
And Mikkel, to follow up here, could you tell us how the idea of CIX exchange came to life and why you wanted to create a spot exchange for carbon credits?
Sure. I mean, again, back to the why we were started, different platform for different people. We really got, as a company, started about 2 years ago with a public-private partnership. And the idea was always there had to be an exchange, but the market don't need just another exchange. You need an exchange that has a focus on delivering what we believe is trust in 4 different areas. So we went out and we listened to our customers and we try to understand where is the gaps in the market right now. And what we realized was that it was not only about creating just a liquidity, because liquidity, if there's no certainty of delivering a good project, doesn't really help the market at all right now. In actually fact, it might hinder further progress that we have. So we realized we needed to create an exchange of a different kind. And that's also why we thought if we have to deliver trust in the product, trust in the use of the product, trust in the price, and trust in the execution, we needed a strong partner. And for that 4th element, that's really where we've been partnering up with Nasdaq.
And Jenny, as you think longer term, how do you see the carbon credit landscape evolving over the next 5 years?
So as the carbon market expands and evolved, I think we were going to see an increasingly scalability in the capital market technology. And there's a true need to offer flexibility over addition of new asset classes, new types of credits, and launch new contracts as the market matures. So it's, as Mikkel was mentioning as well, it's all about enhancing price transparency and liquidity across the market. So I think some new technologies are going to really help to erode many of the barriers that we have held the market back. We've seen so far a very nascent start of registration of carbon credit via tokenization, which uses smart contract to present credits issued by a given registry. It's still very nascent, but I think those smart contracts will have the ability to store information related to the project, which will aid in turn the automation of the carbon market specific workflows, such as expirations and retirement. It's about the framework of verifying carbon credits, which will mature, and also it will just attract all the industrial level of capital and increasing harmonization of credits between the carbon projects.
And Mikkel, you've introduced the first ever daily liquidity window in the voluntary carbon market. Can you talk about how this and how it will benefit market participants?
Yeah, gladly. In fact, I think with our new exchange we're coming to market with, but also the first standardized contract that we're introducing, it's not about one innovation. I like to think of it as 3 different types of innovations. The first way is how we create our contracts. As I was alluding to before, the problem has always been in carbon credits that you want to preserve liquidity, but you also want to make sure that the projects are getting delivered into a standardized contract of a certain type that people recognize. So what we have done is we found a way to preserve quite a bit of the liquidity, but still giving a smaller number of projects that can be delivered. We preserve about 80% of the liquidity within a certain carbon credit type, but narrow down the range of possible outcome for delivery. And that's quite a unique feature here, which means that there's more certainty. The second bit is about the liquidity window, as you rightly point out. I like to think that there is liquidity in this market here, but let's be honest, compared to some of other commodities, it's still a very nascent market. So what we try to do is we try to compress that into a time window of about 30 minutes at a certain point in the day, for which we will print the price, hopefully creating a benchmark out of that. And that is to try and make sure that whatever liquidity is in this market is actually condensed into a shorter period of time. And the third innovation is of simply in terms of how we structure the exchange, the execution. This is again where our partnership with Nasdaq comes in. Creating an exchange is difficult enough, but finding one that people trust and can trade and have the easiness and comfort of trading on, I think require quite a lot of thinking.
And Mikkel, you've spoken about the partnership with Nasdaq. Tell us more about your technology relationship with Nasdaq.
Sure. I mean, for us, as I said, on that third element, it was important that we had something that complemented our trust promise. I talked about the 4 different pillars. And there are many different choices ahead of us. We could have built something ourselves. We could have taken something off the shelf from one of the smaller providers out there. We felt that it was important that we chose a partner that is recognized in the market, who wants to scale the market for the long term. And when you start to filter through all of that, it became obvious to us that there was really only Nasdaq for that. So I believe, and Jeannie can tell me if I'm wrong here, we'll be the first one to use Nasdaq as our partner in their UMS system for our voluntary carbon market exchange. And we're very proud about that partnership, but it's also because I think there is an alignment in thinking about what the market needs, not just today, tomorrow, but also 5-10 years from now. And that's important to us when you have shareholders like the one backing us.
And Ginny, finally, what does the future hold for the Singapore and broader Southeast Asian carbon hub?
Thank you. So Singapore has been positioning itself as a regional hub for carbon-related activities. And the government of Singapore has been actively pursuing initiatives to promote sustainability and reduce carbon emissions. So in addition to carbon trading, Singapore is investing in research and development and innovation and infrastructure related to all carbon capture, utilization, and storage. The government has established research demonstration projects. They're all exploring technologies and their potential applications in Singapore. Obviously, the strategic location of Singapore as a transportation and logistics hubs in Southeast Asia make it well suited to serve as a regional carbon hub. So obviously, it's an exciting time for SCIX because the launch is a significant step forward in the development and of the carbon voluntary market, and it has all the building blocks in place to be every success.
Ginny, Mikkel, we appreciate your insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.